So how much stamp duty land tax are you likely to pay with the changes from the Exchequer? Check out this video as I go through all of the details. Hi there, my name is Simon Misiewicz. Where have you been? I've missed you. Well, welcome back to this episode. My name is Simon Misiewicz. I'm your Finance Tax Director. I'm helping to help you grow your wealth and reduce your tax liability. I'm from Optimise Accountants, and in this episode we're going to be talking about stamp duty land tax and the rates applied. Now, there has been some budget announcement changes that you need to be aware of. We're going to cover that in this video. But there is a link maybe appearing above my head or indeed below this video that gives you access straight to HMRC's website about the Budget 2020 announcement, which in there contains details of a SDLT change. Let's go into the details. So this is it. So the stamp duty land tax has now got a surcharge. So we're going to talk about banded rates in a second. But before we get into that lovely stuff, let's talk about surcharges. Surcharges are those that are in excess of these SDLT banded rates. We've now got two surcharges. We've got the foreign surcharge, so if you're a foreign investor that is buying a buy-to-let residential investment, you now have to pay 2% on the full value. So that's a 2% surcharge straight away. Now, if you're a buy-to-let property investor and you have one property already in your own name, or you're buying a property inside of a limited company, you too have a 3% SDLT surcharge in anything in excess of £40,000. Clearly, there's not going to be too much other than a bin lid in London at those prices, let's be fair. So the total surcharge, really, if you're a foreign investor, you're looking at paying 5%, not 2%. That's because you have the additional 3% as well, the SDLT higher rate. Now, what I've done, you can pause this video if you want to understand what these rates are now going to be applied. They are banded, so you do need to take that into account. You need to probably build yourself a very good tax calculator. That's a good idea for a video. I'll get straight onto that. But for now, this is the table that you will need to use, whether it's a higher rate SDLT, so we're looking at the SDLT bands now buying residential property investments, or indeed the one on the far, which is talking about the residential high rates plus the foreign investments as well. You'll notice that properties of 1.5 million isn't 15% anymore for foreign investors. That's going to be a whopping 17%. So do bear that in mind. It is 12%, by the way, for anyone else that's buying a home. But we are talking here about buy-to-let investments, so we have to take that 3% into account. Now, the one thing I always love about buy-to-let property investments and stamp duty land tax in particular is chattels. It's one of those things that you do not pay SDLT at all. You don't need to pay the banded rate of SDLT. You certainly don't need to pay the 3% SDLT surcharge, and you don't have to pay this 2% foreign tax as well. So chattels is a very good thing. Chattels are things that are around the house. So if you take a house, you turn it upside down, pretty big muscles to do that. But if you turn your house upside down, you give it a good shake, and things fell to the bottom, those are called chattels. Try it with a doll's house and see your daughter cry. Maybe not. Editor! But anyway, let's get back to the serious stuff here, whereby you're taking the chattels, so your furnishings, your furniture, all of that good stuff that isn't attached to the building will indeed be called chattels, and as such it is not subject to SDLT, so you do need to take that into account when you're buying a property. Basically, you'll need to say this is a property value, so let's say you agree a price of £250,000. You might say, well, £230,000 is the bricks and mortar, and then the remaining amount is down to furniture and fixtures, which is not subject to SDLT. So what we've done is giving you an example here. You've got a house price of £350,000, but the one on the right here is going to be valued at £330,000 because we've got £20,000 worth of chattels SDLT calculations on this, and we're just taking into account here the banded rate and the 3%. The SDLT on that value is 16,400, which is a fair saving to be made by identifying chattels, which so many buy-to-let property investors do not take into account. And they should, because it's a natural saving which will help them make return on investments even more. Now let's talk about non-residential. So there's a lot of people buying residential property investments, but there is an opportunity to stop the SDLT 3% higher rate. Not sure about the 2% foreign charge on some of these things on the 6 properties or more, but let's think about the banded rates here. If you buy an office, shop, a warehouse, or if you buy 6 or more properties, or you've got a shop above a flat above a shop or a restaurant, then that will be deemed a non-residential purchase, which basically means you've got less of the SDLT surcharge. So bearing in mind here, this is taken into residential versus non-residential. And you'll notice straight away that the residential goes up to 15%, and yet non-residential SDLT rate only goes up to 5%. So there are many ways that you can reduce the amount of SDLT when you're buying properties. And isn't it time that you either bought commercial properties or you thought about buying commercial properties and then converting them into residential use, just so you can save that SDLT. Now here's an example. So you've got a mixed use. So this could be now a pub, or it could be an office with a flat above it, or a shop and then a flat above it. And what you'll see is a property value of £600,000, but look at the SDLT. So here we got SDLT on a residential property of £38,000, but you're saving a whopping amount by buying a non-residential property. So one of the things you might want to do is buy a portfolio of properties from a landlord. Remember, that's 6 properties. How many? 6 properties. If you can do that, then those transactions will be deemed to be a non-residential transaction, and therefore you can save yourself a lot of money. Now, please bear in mind that we have done an article on this subject talking about reducing SDLT when you're making a buy-to-let investments. That link should be appearing above my head, or indeed it will be below this video for you to read more details about how you could save even more tax. Well, why not book a call with me, Simon Misiewicz, your Finance Tax Director, for at least an hour to understand how we can help you grow your business without paying the tax.